Welcome to TheoTrade. This is Don Kaufman. September 30th, 2020. We are seconds after the cash close in an absolutely epic session. Just wild trade engulfing the markets. Let me actually explain a little bit about what we're seeing on the screen right now, because I think first and foremost, we got to talk about the range. Now listen, the S&Ps just closed. That's the cash close. The futures markets are still open. Now, we hit the bell just a few seconds ago. We were trading up here at the 33.60. Oh, just wait. 2 minutes have gone by. Now we're trading at 33.35. It just keeps coming, people. The S&Ps, okay, we're up today. And again, the range is phenomenal. I mean, 32.91, the low, overnight low. And again, point that out. There's your overnight low. We rallied intraday all the way to 33.84, which is something that I'm going to display here in a moment, only to see the, stimulus bill through, Congress. They're not going to come to terms, yada, yada, yada. The marketplace did not like it, but that's just not saying enough. I mean, the S&Ps sold off. They bounced. Okay, they bounced into the close. They were just up 30 a moment ago and absolutely tanked inside of the last 2 minutes. Again, it's downright wild. I think a lot of people are probably turned on the screen, at the end of a trading day, and not much happened today. Really? Because everything happened. This is what traders, specifically me, this is what I live for. I mean, take a look at those volatility futures. They're all kinds of bid up, like literally coming into the cash close here. They bid up those volatility futures from 30 to 30.5 inside of a 3-minute window. Again, these are the kind of moves that can take, an entire day to occur. They happened inside of 3 minutes. When you do cruise over to the S&Ps, we did 2 million contracts. So I'm going to tell you right now, it was rocking out there. I mean, the volume was there. It was just absolutely rocking. And again, the irony is we end up completely and massively unchanged. But let's get down to business and what we can expect and some of the trades that we've actually got on right now. As I was actually kind of delivering to you a little bit on Monday, I am looking right now for what we term bounce and fade trades. Bounce and fade trades. And I'll give you an idea of kind of what I mean by bounce and fade. I'm actually going to cruise over to Lululemon. Lululemon, pretty good sell side activity. And again, I've got positions all over this thing. So Lulu has some strong sell side activity and absolutely wicked, what I kind of call the rip your face off rally bounce. Right here, we actually stepped in. So we stepped in and we did short Lululemon today, but we used, an in-out spread. So it's defined risk spread. Oh, for example, if you were to do a defined risk spread in here, we're already through earnings. We don't have to worry about that. I mean, essentially, if I actually open up the trade, anytime in the next 30 days, if we have some sell side activity, and really get below kind of that 330-ish level, we're going to be fine in there, and that's going to be a profitable trade. That's all you're trying to do inside of the bounce and fade. I'm telling you right now, I'm not here to try to catch a top. I'm not here to try to, look for this marketplace immediately rolling over, but take what the defense gives us. And this stock actually backed off quite a bit from the highs today. In fact, if you actually look at this on intraday trade, when it comes to bounce and fade, this is a bounce, a little bit of a fade into the close. Okay, it's got to get better. Again, we have 30 days onto which this stock needs to back off a couple of bucks, and the trade's profitable. Like, I don't want to make the proclamation that this is a huge bearish trade inside of Lululemon, because that couldn't be further from the truth. The other trade that I actually did today was inside of Nvidia. So in NVIDIA, really, really similar. I had to actually look around at the usual suspects. The usual suspects. I'm looking at Microsoft, okay? I'm looking, and you look at Microsoft, there's been a little bit of a bounce in here, but it's still nominal. You look at something like Apple, right, yeah, Apple, okay? Looked over at Facebook. I mean, Facebook ended up today massively unchanged. Amazon, too. These bounces were so meager, like I just didn't feel that was the appropriate place to allocate. So I went into NVIDIA because, NVIDIA had a percentage bounce, much stronger. I mean, literally got 5 days to the upside over here. And even in today's sell side activity, NVIDIA was like, unimpeded. So what did I do in NVIDIA? Not too dissimilar. It's another bearish trade. It's a fade trade. You don't go crazy with bounce and fade trades. All right, you step in, all right, maybe this marketplace has got a little bit heated here. I mean, listen, at this point in time, okay, my perception of the marketplace, the entire marketplace at this point in time, is that this inside of the S&Ps, and I want to be really crystal clear because I'm not a big market technician, right? But we talked specifically, okay, a couple times last week about the 3211 handle. We hit it to a T and we bounced from it. Again, that was, even though for somebody like me that's not a huge market technician, I'm a much more quantitative trader, this is absolutely a quantitative level. At this point in time, this bounce, okay, could it turn into the wicked rip your face off rally? It is already, right? But that bounce could actually turn into the beginning of, a new rally. The thing is, with these bounce and fade trades, you don't know where that top is. So you have to step in. And when I say step in, you got to come in here with defined risk and incrementally layer a few positions in with the assumption that we're going to come right back down. Are we going to come back down to 3211 over here? Listen, we're more than a hop, skip, and a jump away from that, but that's something I might look for. But again, I don't need us at 3211. All I'm actually doing is stepping in with a couple of very mild, very, very mild short positions. Again, what we kind of term here, bounce and fade. And it looks like that's the kind of marketplace that we're going to be in right now. When I start referencing bounce and fade, one of the other aspects I want to do is, here, I'll draw it a little bit on the chart for you. The bounce and fade would look something along the lines of this. Some sell side activity, the wicked bounce. We actually take another level lower, possibly another bounce in here. Right now, okay, this is volatility. As I said, like today's trade just exemplified just that. I mean, hey, the only piece of news that came out was over here, right? And that was about the stimulus package, probably miles away from it. It's not going to happen. It sold the marketplace off. Well, guess what? That marketplace rebounded, only to see in 2 minutes, literally 2 minutes, that entire rebound, okay, failed. And that's why I'm saying this is just wild trade is engulfing the marketplace. Everything you're seeing on the screen right now is, they're all like that signature of volatility. And yet, when you start to look at volatility, look at the VIX. You know what the VIX did today? Absolutely nothing. Again, massively unchanged right with the marketplace. Yet the volatility futures are bid up. That is a little bit unusual. I look down, lower on the screen over here, even the VVIX. The VVIX actually got heated. And the interesting irony is the VVIX was ripping, okay, and continued to rip even before that last, 3 minutes of sell-side activity. When it comes to individual stocks on a day like this, I worry less about them, right? Because we're actually got a really high correlation coefficient, even though the S&Ps finish unchanged, right? You have the, 88 stocks up. I mean, that's good for calling it like a correlated property. At this point in time, the assumption is we're going to see a lot more volatility inside of the S&Ps, right? But more appropriately, you should be looking at the Nasdaq, because I made this statement on the weekend video. I'm going to make it again. It ain't going to be over till that Nasdaq says it's over. The monsters of tech, okay, are what are going to be on the chopping block over here in the days to come. If we're going to go into another fit of rage, you got to look again at not just the S&Ps, but specifically the Nasdaq, the Microsofts, the Apples, because the thing that, again, it really resonated with me, these stocks got hit, their bounce was a little bit mild. Again, I expected more from the bounce inside of the Nasdaq. When you start, again, you look at individual stocks here, like Apple, that bounce just didn't do it for me. Could we go right back into some sell-side activity? Absolutely, equivocally, yes, right? However, that's what it's going to take right now to take the S&Ps down. It's going to take the monsters of tech, and that's where a lot of your focus, of course, has to be in the days to come. If we kind of continue some of the rally tomorrow, and again, I want to step back from the screen for a second and say, yeah, I would expect, and I would expect, okay, some more sell-side activity to hit this marketplace. But don't get me wrong, okay? I can't time, you can't handicap when that next round of sell-side activity is going to come. And I think you're fooling yourself if you think you can. That's what volatility is all about. Volatility is great at getting you, okay, to make the precisely wrong move at precisely the right time, right? So all I'm going to do is I'm going to step in. If we continue to see some rallying in here, I'm going to step in with a few more fade trades. Those are trades where I'm looking for that downside. So I'll step in very, very lightly, gingerly, okay, looking for some more fade trades. If we just turn right back around and that fit of rage starts coming for another leg lower, then great. We've already got a couple of fade trades already on. At this point, though, unquestionably, there's some volatility out there. Again, the S&P's going to finish out the day unchanged. Again, a wild, wild range, almost 100-point S&P range. You do recall that the entire marketplace this week was expecting an 87 expected move. And the last thing I'll finish up with tonight is showing you just that expected move, because you know what? Right there, that's the upper edge. Again, the upper edge of the expected move. We tagged it, okay, to a T here on Wednesday. I would look for a lot more volatility coming into Thursday and Friday. Obviously, we've got all kinds of job numbers from initial jobless claims to the employment situation. It's going to be a rockin' end to this week. Thanks, everybody, here for joining us at TheoTrade. Have a wonderful evening. Bye-bye.